Hey everyone, welcome back to Corporate Decoder, the place where we untangle those complicated corporate filings so you don't have to. Today we're diving into Planet Fitness's latest proxy statement, but don't worry, we'll make this less painful than leg day. This document asks shareholders to vote on some pretty important stuff. Think director elections, auditor approval, and even some changes to the company's own rule book. Let's get started. First off, this proxy statement is an invocation to the annual shareholder meeting on May 6, 2025. It explains what's up for a vote and why the board recommends voting a certain way. If you own stock, this is your chance to have a say in how the company is run. One of the main things to vote on is who gets to sit on the board of directors. This year, 3 directors, Craig Benson, Cami Dunaway, and Christopher Tunko, up for re-election. The board is urging everyone to vote for them, of course. These people help steer the ship, so it's a pretty big deal. These aren't just random names. Craig Benson, for instance, brings decades of business experience, even serving as the interim CEO for a while. Cami Dunaway has a strong marketing background, and Christopher Tanko knows a lot about franchising. The board thinks they're the right people for the job. It's important to have a mix of backgrounds on the board, and the filing includes a handy skills matrix. This shows at a glance who has expertise in areas like finance, marketing, or franchising. They are also proud to show off diversity on the board. The board also makes sure that most of its members are independent, meaning they aren't tied too closely to the company's management. This helps keep things fair and balanced. Next up is the boring but necessary task of approving the company's accounting firm, KPMG. The board wants shareholders to give the thumbs up to KPMG continuing as the independent auditor. The proxy statement also breaks down how much the company pays KPMG. In 2024, audit fees were about $2.4 million, and it's all about transparency. Now we get to the good stuff, how much the top executives are making. The proxy includes a long section where the board lays out its philosophy on executive pay. They want to tie pay to performance, attract good talent, and align executive interests with those of shareholders. In 2024, Planet Fitness did pretty well with total revenue climbing to $1.2 billion. Net income was solid. A key metric the company uses is adjusted EBITDA, which jumped 12% to $487, $887.70 There were some big changes in the executive team with a new CEO, Colin Keating, and a new CFO, Jay Stash, taking over. The filing details the compensation packages for these new leaders, as well as the departures of the previous executives. The details of executive compensation are in this table. For example, Colin Keating's total compensation was almost $11 million. A large portion of this is linked to the stock. Keep an eye on that to track if the board is being generous for no reason or properly rewarding performance. It shows how executives like Colin Keating and Bill Bode earned bonuses based on hitting certain company targets. These bonuses are never guaranteed, they have to do the work. There's also a vote to approve on an advisory basis the compensation of the named executive officers. It's a non-binding vote, but it lets shareholders tell the board what they think of the pay packages. Then there's a proposal to approve a new incentive plan called the 2025 Omnibus Incentive Plan. This plan lets the company keep offering stock options and other awards to employees and executives. Here's where things get interesting. The board wants to change the company's rulebook to remove something called supermajority voting requirements. Currently, some important decisions need approval from 75% of the shareholders. The board wants to lower that bar to a simple majority. They want to be more flexible. Another proposed change would limit the liability of certain company officers, similar to the protections already in place for directors. Finally, there's a shareholder proposal asking the company to publicly disclose its EEO-1 report, which breaks down the workforce by race, ethnicity, and gender. The board doesn't take a position on this one, leaving it up to the shareholders to decide. The filing also gives background information on the executive team, people like Colin Keating, the CEO, and Jay Stash, the CFO. It's interesting to see who the biggest shareholders are. BlackRock, the Vanguard Group, and T. Rowe Price Investment Management are big players, each owning a significant chunk of the company's stock. It details any potential conflicts of interest, like the CEO used to own the franchise locations, tax payments, agreements. These are the type of things to watch out for, because what they show is that while profit may look a certain way, it might not be as great as reported if some proceeds are going out the door. Now, what do we make of all this? Planet Fitness seems to be sailing a steady course, but these proxy votes could steer the company in a slightly different direction. On one hand, removing the supermajority requirements and limiting officer liability could give the board more flexibility. On the other hand, shareholders might want more transparency on diversity and inclusion. In terms of potential upside, expanding and incentivizing key executives seems appropriate. All in all, Planet Fitness appears stable, but keep a close eye on how these potential changes play out. Thanks for watching. If you found this decoder ring helpful, be sure to hit that like button, drop a comment, and subscribe for more insights into the world of corporate filings.